How's it hanging? What's up, Avery? Penny? What's happening, Christian and Bandit? Eddie Webb, TJ, Francisco, Anastasia. What's up, Tate? Eddie, Vic, and Shane. How you guys doing? Hello, Min. Hey there, Ben. All right, disclosure, I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA/SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got out of Bank of America long, I got out of Carvana short. I did keep a little bit of this coin short. Ooh, I actually just, I'm not allowed to say if I just covered some, because I'm on YouTube. All right. Crazy day, guys. PPI day today. PPI came in light. I said in the morning meeting that I didn't really know what to think of it, to be honest, because I feel like we've seen in the past on a light PPI them sell it, which I would think with the CPI, it's more directly correlated to inflation, and that number coming in light is very good for markets. With PPI, I get a little bit nervous that the market gets worried about an economic slowdown when they see PPI come in light. But didn't really have much of an effect on the market pre-market, right? You can see here 8:30 when the number hit, just a bunch of volatility where we went nothing, and then at 9:30, we basically just continued our daily chart trend to the upside. Whether that was brought on more by PPI or that was just brought on by, further longs coming into this market as the VIX deteriorates, as the dollar goes down, as interest rates come down a little bit, I don't know. But that's the nature of this market that we're in right now, right? So we got this dollar is getting smoked. It's starting to get pretty extended to the downside, actually, and it's coming into pretty big support. The UUP ETF. TLT, really big few day bounce here after that kind of false break or shakeout below $100 in TLT. We've snapped all the way back up, so interest rates coming back down a little bit. Going back over to the market, so today the S&P closed up 0.8%, or 0.75%. The Qs here closed up 1.7%, very dramatic. And the IWM up 0.7%. So strength across the board. I think breadth is pretty good still yesterday through today, though I did have a couple long swings that actually were negative on the day. But yeah, I mean, this market's great. QQQ took over leadership again. It's exactly what we've been talking about, we've just been seeing this for months. As of yesterday, the IWM was starting to get a little bit too extended. The Qs were not. So guess what? The Qs woke up over the course of the last 2 days, and the IWM took a break. It's just constant, consistent bullish rotation in this market. I said in the morning meeting today that I felt we were kind of in no man's land, and what I mean by that is it is difficult to put new longs on because the degree of extension that we have, but we're not so extended that you can feel really confident getting to the short side. And where I start to become more confident about building into shorts is usually at about $10 of extension from the ADMA and the SPYs or the Qs, which at pre-market price action would have been about $380 for the Qs. Well, just into the close, we put in a high of $379.99 before pulling back over the course of the last 15 minutes about $1 in the Qs. So we basically got there into the close. I didn't want to short into the close, though, with Qs. I do have some coin, which I'm happy to chat about a little bit as well. But I decided with the market, I wanted to be a little bit more patient. I would love a gap up tomorrow. And maybe not, because I got this Coinbase on and I want that to go down a little bit. But for the most part, especially if I'm not talking my book, if I'm talking about new trades, I would actually love the market to gap up tomorrow. I think if we can gap up tomorrow to like the low 380s in the Qs, that it's a pretty solid opportunity to really start building into the short side on this market for the first time in a while. For the first time really since the bigger short call out that we had at highs on June 15th, June 16th. If we can gap up tomorrow, I think that we're once again really right in that area where we can look to fade what's been a now very big move. We'd be about $10 extended in the Qs, For the SPYs, it's really like low to mid 450s would be the spot where I'll feel more comfortable getting short. And the IWM, you know, a couple of days of rest here, we probably would be talking about like 197 for me to feel comfortable shorting the IWM after a couple weaker days where they've rested a little bit. So we'll see. At the same time, I think it's difficult to imagine this dollar continuing to deteriorate at the pace it's been deteriorating. It doesn't mean we can't have another weak day. Maybe we get a gap down tomorrow in the dollar, which causes a gap up in the market, and we can look to fade that a little bit. But we are finally starting to get to that point again after what's been a really big run. There's been a lot of deniers out there on this run. Those deniers have not been us because we've been obeying the technicals, and the technicals have been giving us a bullish signal ever since the break of 4,200 in the SPX. So I think as a team, we've just done a really good job. So pat on the back to everybody on the team. With that said, I guess to talk about some trades today. So, you know, first of all, I did really well with like Carvana short yesterday. And I kept it overnight, and it got downgraded, and I was able to fully cover my position at like 35 quarter. It bounced back intraday. I traded it more intraday, and was able to make a little bit more money on those bounce backs. You know, so I was able to be in what was a very hard trade, successful in Carvana yesterday into today. The day before that, Roku on this day, on the big rip day, I was able to make a little bit of money in that one as well. You know, this is just very difficult trading. I think that the day before that, was that when I was battling Rivian? I struggle to even remember. I think for 2 days in a row here, on the 7th and the 10th, Friday and Monday, I really battled Rivian to the short side, and I made money. I made money on the Friday, got all out into the close. I made even better money, I think, on the Monday, was all out of that by the close. And, you know, I was starting to remark a little bit, like, it's just really hard trading. This counter trend, counter momentum stuff and some of these names that have been running, I've definitely been hurt on that in the past. You know, I remarked here into the VTF and in the close, I lost I think 60 grand in Palantir and got out, covered my position at like $35 in the bubble run, scratching my head, believing it was just a BS company that belonged at $5, and of course, and now it's back at 17. But of course, I was, you know, eventually right. This thing pulled all the way back to 6. But when squeezes come in, especially in these heavily shorted names, you just got to be very careful. But I've been able to be successful in Rivian 2 days in a row, in Roku, in Carvana for a couple of trading sessions because of game planning and position sizing. You know, really position sizing was a big thing about it. You know, starting really small, waiting for the signal, getting heavier at the right spots, capturing the pullbacks, not being overly greedy in counter trend trades. And I failed to do that in coin, to be totally honest. You know, I was a little bit patient on it. I did not get involved in coin at all until it really got to about $100. You know, shorted into this extension peak at 102.40, looking for a move back to the ADMA, basically on the 5-minute after like 8 nice solid green candles in a row, just looking for that technical pullback. That technical pullback really happened primarily through time and not price. And I was watching it, and I was like, man, you know, I'm in the money on this thing. The stock is super well supported. I'm watching this super, you know, well supported stock. Buyers consistently coming in $100. The ADMA catching up. And I was also remarking, though, to myself, because I wasn't on the radio at that point, that this thing is not making new highs. And for me, that was the signal, like, all right, you know, not making new highs when it should. You know, by this 245 candle, when the ADMA caught up to this flag, it should be breaking up. Instead, it's making these little tails. What it did was it actually did break below the ADMA. It broke below $100. But this is a classic bull flag shakeout pattern. And I saw it right away when it happened. I was like, okay, you know, this candle just closed back above $100. They just shook out a lot of the, you know, tightly trailing longs here. And you know, I gotta be careful. They're probably about to rip this thing up. And you know, my game plan was really just for the pullback to the ADMA. So what I've done successfully on these previous days that I did not do today, and it hurt me, was say, okay, I was looking for the price correction. It happened through time, but the stock did exactly what I wanted it to do. It corrected. I just wanted a price correction. It gave me a time correction. But for me, that means that my trade still worked. It just means that I'm not going to be as profitable in it. And I was, up a decent chunk of change at lows here, when this thing came into to $100. And instead of doing what I've done previously and using that as an opportunity to size down, recognizing, hey, you look for the price correction, you got a time correction, that absolutely is what can happen. And if anything, that's even more bullish for the stock. I don't know. I didn't do it this time. And I don't really know what that reason is. I don't know if it's just because I've been doing too well recently and was like, oh, Coin's a BS company. It's all the way up about $100. Ran from 84 today. I'm going to get this bigger pullback to, 96 or 98 into the close, and everything's going to be fine. And I'll have a nice, really solid P&L on it. But I wasn't consistent, and that's important, right? We talk about the key to consistent profitability is to be consistent in your approach, and that's not what I did. I've been very consistent, taking very difficult trades, and I'm always the first person to recommend not being involved in counter trend, counter momentum trades, especially when there is option flow that's coming on the other side of how you're trading it. You really don't want to be battling that stuff, but into the areas of extreme extension, I've had some good profitability. And then today, I don't know, I didn't follow my game plan in the same way that I have, and I got punished for it. It did exactly what it should do. It gave a false breakdown of the bull flag, so it shook out some short-term longs here with this down tick, closed right back above, it was clearly well supported, and then made its next leg. And totally ripped here, maximizing volume really on this 320, 325 candle, which is where I try to get a little bit heavier again. Actually had like an order malfunction at one point where I tried to add bigger and didn't get any stock, but it is what it is. And, here at the end of the day, I'm sitting in a decent loss in it. And, I did size down a little bit into the close, and I did decide just to keep some. I want to continue to manage this position into tomorrow just off the extension, but it's got a 20% short float, and it's really just a day one. So I ought to be prepared to see 115 tomorrow, because it could absolutely do that, especially the way these silly analysts have been chasing price in a lot of these growth stocks. Who knows what's going to happen tomorrow? I might get lucky and get a Carvana, which the Carvana downgrade this morning really wasn't luck for me. It was more the icing on the cake. I did everything right in Carvana yesterday. It closed with a big tail to the upside. I had a really good profit cushion on it. I decided to keep some stock in it, and then the next day I got the downgrade. That wasn't me getting lucky. That was the icing on the cake. Tomorrow in Coin, maybe they come in and downgrade this thing, and I get a little lucky and I get a pullback to 102 or something like that. But I honestly think that it's even. Coinbase received 2 price target changes Thursday. It's today. Barclays analyst Ben Budish downgraded Coinbase from equal weight to underweight and raised. Do you know when that came out? Was that pre-market? And raised the price target from 61 to 70. I love when they downgrade and raise. Yeah, so the problem there, Francisco. Oh, that's right. I remember that came out pre-market, and I actually liked this to the short side. I forgot this was even on my list this morning. I totally forgot. This was on my list this morning for a short for the inside day and down because of the downgrade. There was a news event that caused this move up today, though. So there's a real chance that now the analysts use that news event as a opportunity to actually upgrade the stock tomorrow, which sets off an even further squeeze. It is short 24% short float, something like that. Yeah, the Ripple news that hit, that court ruling really woke this thing up and went. So, again, maybe I get lucky, I get a downgrade tomorrow, and I get a move to 102, and I still end up making money in this thing. It's actually probably even higher probability that there's a handful of upgrades tomorrow, and the stock's at 112, 114, 115 at some point during the day, and I'm just, losing even more money on it because I decided to keep at least I'm smart enough to size down a bit, but I'm deciding to keep some to, continue to monitor it and kind of try to fight the good fight. So we'll see how that plays out. But I wanted to go over this because I feel like I've been trading really, really well recently. Like I've been trading. I'm just gonna be honest. I've been trading incredibly well recently. It's probably the best that I've ever traded. And at a certain point, that can not be a good thing, to be honest, for me. And I think I talked about this in an afternoon meeting somewhat recently, where I discussed how I think Jordan had asked me this question. I actually tend to trade best when I'm down, and I trade worse when I'm up, because I get a little bit too loose. I don't make mistakes like what I made in coin today when I'm not when I've taken a P&L hit, when I've taken a P&L drawdown. I'd make these mistakes when I'm doing well. So it's just a reminder for me, even though I'm keeping some here and kind of continuing to battle a little bit. This is a reminder to me that I got to go back to the basics. I got to go back to consistency. I got to go back to game planning. I got to go back to what I've been doing so well for this entire calendar year so far, which has been listening to the technicals, being involved in the breakouts as we've been breaking higher, being primarily to the long side of the market. But then when we hit the areas of extreme extension for the market, not for individual stocks that can continue to squeeze and squeeze and squeeze, for the market where, this type of move for the index, I don't want to say it's impossible, but it's nearly impossible compared to what can happen in a volatile growth stock with a 25% short float. I got to go back to the basics. And again, that is being on the right side of the market, which has been to the long side of the market, until we hit the points of extreme extension, which we're starting to get there right now. We're starting to get there again for the S&P and the NASDAQ, in which case I really piece out of my long swings, which I've already done. I'm very light to the long side right now compared to where I've been all year, and it feels great. And then at a certain point, I begin to appropriately piece into the short side. And like I always say, I've been saying it constantly, when it comes to the counter trend stuff with the market, let alone a name like Coin or Carvana that's got a huge short float that can just squeeze and squeeze and squeeze, I would be better off to miss the short entirely than to be in too early. And that's been my thought process with the market also. Like I could have started shorting some Qs in the close, and maybe the whole market gaps down tomorrow and the dollar gaps up and I don't get my chance, and I'll be fine with that, because I pieced out of my longs, and as we pull back I can piece back into them and keep the price differences in between. Or I get the gap up tomorrow and my patience finally hits that point where I can appropriately size myself, which again has been key to all this counter trend stuff that I've done at any point throughout the year. I can appropriately size myself and begin to build in to the short side and the more extreme extension from the index as I continue to piece out of longs. So there's a degree of hedging there, whereas at the same time it's an actual trade for me. So yeah, that's kind of where it's at. Definitely took an unnecessary hit, I think, in this coin today. My P&L on the day ended up flat-ish, and coin is basically the only thing I'm down in. So it's like I got all these winners on my list, and I'm not going home with any real money today because of the amount that I'm down in coin, which just isn't what I'm here to do. I'm here to pay myself. So that is all I've got for you guys, and I am happy to take a look at and review anything that you guys want to talk about. So, scrolling up here in the VTF to about 4 o'clock, not seeing any questions up there. Yeah, the moon Coinbase monster. I agree. It's very hard to chase. I mean, look, the news when it hit was very significant for coin. I would say that the other side of the news, though, that caused, like when it first came out about the stuff that this court ruling is alleviating to some degree, the stock was at $59 and it caused a gap down to 46 that got bought back up to 52. Like, the negation of that news in theory in coin brings you back to $65, not to 110. But we know this entire market's been squeezing. This entire market, everything that has high shorts has been squeezing. So I think that this was just the icing on the cake for real crypto believers who, and I've been saying it forever, I really dislike Coinbase as a company, and I'll say that with a neutral view on crypto. Like, for me, the jury's out on crypto. I don't get it. I really don't get it. I've mentioned it. I don't understand the use case. But I think the most bullish thing about crypto is that it even exists. But I think you could be bullish on crypto and not be bullish on Coinbase. You know, the thing that I've been saying from the beginning is just the commissions that Coinbase charges are just ridiculously unsustainable. They're super, super high. And I would expect at some point it's a race to the bottom as other, you know, brokers, crypto brokers are able to really come online, though there's been a lot of legality issues. So yeah, we'll see how that goes. From Steve, trading always involves balancing greed and fear. When trading good, watch the greed. 100%. 100%. Penny, this type of transparency and talking through your thoughts on trades like this is so appreciated. I appreciate you being here, Penny. We have an awesome team. Thanks, Gilbert. Yeah, I shorted that coin IPO at like, I was short at like, I don't know, 410 and covered like 350 or something, or 320, I think, and thought I was an absolute genius, and it just obviously continued to die and die and die. All right, I see a long one from Rex. Let's jump into the Rex question. Yesterday I only traded NVIDIA. Oh yeah, you went full BP on NVIDIA. Great conviction. I remember your trade. I'll read the rest of your long question. But yeah, this inside 5 and up on the third candle in NVIDIA was your momentum execution trade on it, and it was a fantastic job. So let me read what you have to say about it. I went basically full BP on the 940 inside 5. That's what we just went. Full BP. I love the conviction. I understand that one trade could cost me to be instantly locked out if it didn't work, but I thought it was an A+ setup. CPI came in light. NVIDIA had an inside day. It gapped above 430, which is a very clean level with news. And I thought if it's going to go, it's going to be a day one for big cap tech. Because of that, I only sold 20% of my position on my 1-to-1, and then sold another 10% in front of 440. Let's go. I saw that it closed on highs, so I held the rest of it overnight. I'm going to pause you there before I read the second half. That's just a tremendous, excellent job. You know, one of the things I talk about, and I talk about it in my game planning class, is that at a certain point of being an experienced trader, you want to implement what we call risk skew into your trading. And I'm a big fan of doing exactly what you did, which is creating a grading system for your trades based on risk reward and probability of success. And the A+ trade is going to be that rarer trade where all the layers of probability are on your side, and you've got a fantastic looking risk reward on the execution. And on an A+ trade, that's when you would go maximum risk, as opposed to a C trade where it's not as good of a risk reward, you don't have all the layers of probability on your side. That's a C trade, you take a percentage of risk. So if your maximum losses, and I like to use just simple numbers, it varies for everybody, different account sizes, but if your maximum loss on any given day is $500, on a C trade, maybe you're risking $75, and on an A+ trade, you say, this trade is so amazing, everything is so lined up, I'm gonna risk the entire $500 on just this one trade. And what you're telling me here is that's exactly what you did. You recognize this as an A+ trade. All the layers of probability that you like to look at were on your side. The market was on your side. There was a market-related news event. There was a stock-related news event. There was a great-looking daily chart, great-looking daily breakout. You were expecting relative strength to come into FANG names broadly, and the risk-reward on the execution of this inside 5 with the 5-minute chart also acting as a confirming factor where we're all on your side. And you said, you know what? I'm going to risk my entire day on this trade. If it fails and I get stopped out, I will be happy with myself because I saw this trade as a very high probability, really good trade, and I know that even those can fail because anything can fail in the market. All trades will fail over enough time. And you went for it, and you were greedy on the game plan, which I also love. You know, I'm a big advocate of the one-to-one kick at, I'm a big advocate of some 50% of your position at one-to-one in order to cover risk, unless it's an A+ trade. Because that A+ trade, again, is so outstanding insofar as risk-reward, probability of success, and all that, that you want to be greedier as far as your profit-taking in it. So you sell just 20% of your position at the one-to-one. You're holding 80%. You sell just only another 10% at 440. You hold the rest to the close. Sounds like you're very greedy with any trail if you had it at all. It closed pretty much at highs. You keep it, and then you had the great gap up continuation the next day. So that's big pat on the back. Really good job. Let me read the second half of your statement. This morning, NVIDIA gaps up. I saw the market is on day 4, a little bit extended, but at the same time, NVIDIA just broke out of a 2-month consolidation range, and also is at an all-time high. I only sold a tiny piece at around 450 at the open. Then I bought it back at about 446-ish when the 15-minute caught up. I love all this. My thought process is that selling NVIDIA into 500. I love it. But at the same time, so it sounds like you've got a big picture target of seeing if you can get a move to $500 in NVIDIA, and there is no resistance in it, so why not continue the trend? But at the same time, NVIDIA was extended, so I'm not sure what to do with my position instead of holding. Most of the time, I feel like the stock is extended. I want to sell a piece and buy it back for cash flow, but it turns out the stock kept on going and never gave me a chance to buy it back. Can you give me an opinion on creating some cash flow? Also, my thought process on NVIDIA. Yeah, so again, the whole thought process is fantastic. So you're keeping the position overnight, right? So if you're keeping the position overnight, you're assuming that overnight risk, so you should be willing to give it back to your original stop loss. And what you're looking for is the ability to be able to trail on the daily chart. You want a higher low followed by a higher high with the ADMA to catch up to that low on the daily chart in order to be able to eventually raise your stop. And maybe you get a gap up tomorrow and the ADMA continues to catch up and you get a pullback to, I don't know, 450 and the market pivots there, and then you continue your way higher to $500. Maybe this thing, gaps up tomorrow, the whole market gaps up tomorrow, and then the market decides they care about the recession again, the market goes down, your stock goes down, you give it all back, and you can get totally stopped out. You got to be proud of yourself no matter what the end result is for how this trade works out, because you did such a good job here, and you're really trying to maximize your greed. So you can have a game plan for yourself based on your remaining core position to, no matter what, I'm trailing this percentage of my position just for the trend to continue for as long as it wants to continue. And at the same time, I will take another percentage of my position and I'll sell it and look to rebuy it, and I'll sell it and I'll look to rebuy it. And sometimes you sell it and it continues that day and you don't get the rebuy, but maybe the next day it gaps down and you actually rebuy it the next day. So some of the cash flow on some of the stock that you weren't able to rebuy could potentially still be there. You just end up rebuying on a different day, and that's going to be fine. Also, though, it might just continue to go and you don't get the stock back, and that's fine. That's fine. You want to have a balance with your game plan on what you're willing to trim to try to make cash flow back and forth, and what you're willing to keep for that bigger continuation. And you want to be okay with the fact that, if you sold a small piece of your position, 10% of what you still have or 5% of what you still have at 450, and you never get to rebuy it and it just continues to $500, that you're fine with that. And it's a balance between what do I think I can make as far as, the stock going sideways and pulling back and I rebuy it and resell it, versus me not making that money because it just continues without me. And I think there's a balance there, and you have no idea what the exact result's going to be. In the event that this thing fully fails, which could happen, you'll be really happy that you put some extra cash in your pocket by selling some and buying it lower, and selling some and buying it lower. If the stock just has a straight vertical momentum move to $500, then you'll be unhappy that you sold stock at 450, but there's no way to know. So I think you want to have a balance of the two, that maximizes all of the potential situations that can come along. So again, really good job there, Rex. Big shout out. You're doing great. Keep it up. Whew. From Ben, I have a question from yesterday. I was watching NVIDIA, another NVIDIA question. I was watching NVIDIA off the open yesterday, gapping up above 428, but I wasn't sure if I should buy it off the open. The inside and up on 945, relying on pure momentum, or wait for the extension to satisfy itself before jumping in. Yeah, I mean, that ADMA was pretty rapidly catching up. You know, you are buying for some momentum here, especially if you're using the stop loss of just the inside 5. And I'd be curious, Rex, if you could let us know what you were using as your stop loss on this trade, if you were just using the inside 5 or if you're giving a little bit more space to the pivot on the opening candle or the pivot on the secondary candle. The inside 5 low stop loss is certainly a little bit of a momentum stop, but that ADMA is catching up pretty rapidly, and really this 935, 940 combo of those two candles is a time correction, right? You got really extended off the first candle, you rest the second, you rest the third, you get the inside 5, then you get the continuation. It's allowing the ADMA to catch up. So one thing that you could have done is just buy the open versus 428. I think it's what we talked about yesterday morning. It's a little bit of a different trade. It's a little bit more of how I actually usually take those trades. The other thing you could have done is execute exactly the way that Rex did it. So I think that you can utilize Rex as a great example of how you could trade it. Obviously, in this case, the momentum played out, and my patience cost me my entry. Yeah, you know, again, I just want to repeat, absolutely, this is a little bit of a momentum stop loss, but it's not, like, massive. Like, the ADMA catches up to that low within 10 minutes. It's like rapidly kind of catching there. So, yeah, just something to keep in mind. Besides the huge volume, which I'd argue this was not showing at 945. Let's take a look. It's definitely a little elevated. That second bar, that third bar, not like massive compared to a typical morning, but it was elevated. Not massively though, so I could see both sides of that. What do you look for a signal that you should use the momentum? Yeah, so one is definitely the volume. I really want that volume confirmation, and I would say that this volume was decent. Maybe not ideal, but decent. And then just the other layers of probability. All the layers of probability that Rex is talking about. You got a market-related news event, you have a stock-related news event, you do have some degree of elevated volume. Those are all extra layers of probability that you could go into it. My question has been answered. Cool. Go for the jugular. What is your opinion on UNH earnings tomorrow? Open. It seems I'm the only one in the group trading healthcare sector this month. XLV, generally boring sector. Yeah, I really don't trade the healthcare names very much. I think XLV is a little bit boring. I think UNH is a little bit of an expensive stock. So the spreads are a bit wide for me. So I usually am not looking to be involved in that. If they report tomorrow morning, which I think that's what you're telling me, I have no opinion. I really, I don't want to say I never have an opinion, but I generally try not to have an opinion for the most part into any earnings report, because the truth of the matter is there's no way to ever know. So I got no way to know. And if you're holding a position into earnings, I think it's always 100% of the time gambling. The degree of an opinion that I might have sometimes is actually like this delta, where, and this is really the extent of it. When you have a really big move to the upside into an earnings report, a good earnings report is oftentimes not good enough. An earnings report, the Delta earnings report that happened this morning, if the stock was trading at $36, $37, it probably would have went through the roof on it. But it had a really big run. And so I've seen this very consistently over the course of my career. When a stock has a really big run into the report, a good report is oftentimes not good enough. And the opposite's true also. If you have a really big down move into a report, a mediocre earnings report is sometimes good enough to really get that thing going again. So that's more based on the expectations going into the report on like a more whispered number kind of idea, based on how it's traded into it. So that's the extent of the opinion that I would ever really have on an earnings name. Outside of that, it's pure guessing and pure gambling, and it's generally not something that I would trade off of personally. I do think, but that's because I don't trade options. If I was ever going to gamble, because I still think it's gambling, if I was ever going to gamble into an, if I was ever going to gamble into a report, I would gamble with options because you know exactly how much money you can lose as opposed to doing it with the stock. So, and if I ever was going to gamble, I probably would do it with something like Delta, where I would take more of a bearish bet just because it's had such a big run into it, where I feel like the odds are maybe a little bit better than 50-50, because it's like normally, you know, close your eyes, 50-50, right? It goes up, it goes down, or sideways. I think that when you have the big run, then you have the higher probability of even just a mediocre report actually causing the stock to go down. And in Delta's case, there's actually even a pretty decent report. From Joe. What's up, Joe? Love the trading room. I tend to lurk in the background, you and a lot of people, but I want to start participating more. I appreciate that. I would love to see that. Sorry for the length of this question. I took a losing trade in Carvana today. I got short on momentum when it broke the low of the day. And the prior day's low of the day. If you can, on these types of questions, always try to give me a timestamp. It makes it easier. Like that could have been the first 5-minute bar of the day where you did that, or that could have been a short through 11:20. So I'm not sure what time you did that. 11:22. Okay. My entry was 35.38. I put my stop at 36.01. Okay, that's perfect. Sorry, I just got distracted by this coin ripping in my face. Put my stop at 36.01. I thought we could get a move to 34 or lower. So I held through the flush and sideways movement and reversed on me and took a loss. I'm not sure about the trade idea, the entry, or the stop. I think it may have moved too much already to be holding it for more than a scalp. Thoughts? The first thought that I have is covering your risk. It looks to me like you got a big enough of a move where you could have gotten your risk covered on it. I'm not sure if you've gone through my training program classes. If you haven't, I would encourage you to take a look at them. Specifically the game planning class that I have in there, which is where I talk about, you know, covering risk, because the fact of the matter is trades fail all the time, and we could get into, you know, my opinion on if it's a good trade or a bad trade, but regardless of that, trades fail all the time. And for me, there's nothing more satisfying than losing nothing on a failed trade. Losing nothing on a failed trade, and that I think could have happened for you here. You know, your price isn't bad. You got 38 cents. Your stop, you know, you got 20-something cents risk. You definitely get enough of a move here to cover your risk. I would love to see this trade fail and you lose nothing. That's the biggest piece of feedback I have for you on it more than anything. In regards to the trade itself, not my style of trade personally. I get it, and there is definitely a lot more room here in Carvana. This thing could go down to $30 and still actually be healthy and bullish. For me, I tend to shy away. The closer it gets to on a counter trend trade, which I'm pretty sure we can agree on the daily chart, this is a counter trend trade. The closer you get to the ADMA, the less I'm interested in the trade. I want this thing at $44, like where I had it yesterday, if I can get a signal up there when I have that maximal extension. That's just me. So you know, I'm not hating on your trade at all. I think that you have a legitimate thought process to your trade. You executed it, I think, in an appropriate manner through the levels that you were looking at. It's just not my trade. And my way is not the only way to be successful in the business. So that's my thought process on the trade. I would generally say I'm fine with it, though. The only thing that I would like to see you do is not lose money on that. I think you do that by getting your risk covered. Appreciate the question. Would love to see you comment more, and that goes for everybody else who lurks in the background. Next from Marco, question about a long position that I started a few days ago in Disney. I'm pretty heavy. I started at 89. What would be your stop loss for a swing position? My target's around 130 lows. Probably this 87 low, to be honest. If you want to keep it tight, you could use one of these more recent pivots, the 710 low or the 76 low. It's tempted higher low here to see if it breaks up. My opinion about the swing, I don't like trading Disney. I find the stock to be very difficult to trade. I think that the chart here is very sloppy. I'm inclined to think from a fundamental perspective that Disney is a value trade here, and I like it. It also could be a value trap, and also could go to 80. I think at 80 bucks though, like Disney's at 80 bucks, that'll be something I'm almost interested in, like potentially maybe buying in my retirement account at that point, and just holding it because it's so cheap from a valuation perspective at that point. From a technical perspective, you got to clear above 91, and then it'll start looking a lot better. Hope that helps, Marco. From Dave S. I'd like to ask about stops. My understanding of the strategy you advocate for is that you keep your stop loss at the initial risk point even after selling half to cover risk. That's generally correct. Sorry, I lost my spot in your question. That you keep your initial... Sorry, let me just reread what I just said. My understanding of the strategy you advocate for is that you keep your stop loss at the initial risk point even after selling half to cover risk. That's right. I have found in the afternoon I am frequently able to cover risk on trades I take, but find myself rarely able to start taking profits due to the move not giving continuation. Keeping that in mind, I switched to a stop loss moving change today to the initial sale point, so that I have profits at the time as removing risk. The trade was at 148 on the NQ, which I don't have the cash NQ to be able to pull up. Covered half at that price and moved my stop loss down. Okay, to your entry price is what it looks like. What are your thoughts on the trade, and can someone change their risk dynamics at different parts of the day? Yeah, I mean, any trade can have a game plan in it, right? So you establish your game plan ahead of time and you follow it. I really don't like using stops at my entry points because I find that they're not objective to the market. They're subjective to me. They're my wants, right? It's what I want. It's a price point that's important to me. I like to use price points that are important to the market. And I do raise stops. I just have very specific trailing rules that I implement in order to do it. And then I have a game plan that helps me decide just how greedy I want to be, how aggressive do I want to be on that trailing stop. My trailing stop rules can also be found in the game planning class, but they are pivot. So I trail based on pivots. That pivot is confirmed by a new high, new low, and the ADMA catch up to that pivot. Those are the three rules that I implement there. So yeah, I love trailing stops. You just got to be a little bit careful, because if you trail too tight, you have a position at the beginning of the day and you're trailing in on those rules on a 5-minute chart, you're asking to get stopped out. And then maybe like Rex's NVIDIA trade, it closes really well, it closes on highs, and you get continuation. So, hope that helps, Dave. So it covers everything there, I think, in the virtual trading floor. Let me pop on over to the YouTube. Let's see if we got questions in the. We got a lot in the YouTube here. Oof. Any thoughts on how to deal with coin? I was pretty early with the news. Hopefully you're on the long side. But every price after the news seems late for me, and we just went higher for the rest of the day. So did you get stock? If you got stock, you're golden. Otherwise, I mean, you know, whenever it's a news event, you just have to assess the risk reward of the price that you're able to get. And if the price was $90 and you'd have to give it down to 84, I'm not taking that. So it's just a matter of, you know, when you're dealing with a news event, what price can I get versus where I have to give it to, and how important do I think the news is 100% what it comes down to. And then there's your price, and you're watching it, and it's either worth it to you at that price or it's not. Turbine like Rivian, Coinbase playing catch up with the market gains since January. I'd say more than catch up. Healthy high yield oils are due for catch up. I've been wondering for that too. I mean, they have. You know, XLE's had a pretty big move off this 77 support that we just tested on June 23rd to be up at 84 bucks. Obviously, it's not as big of a move as Coinbase, but talking about the entire energy sector, it tends to not move like Coinbase. I kind of answered Mike's question. All right, Mike, thank you. Back to Turbine. Coinbase has an ecosystem and also Coinbase Cloud, a software cloud with a low price to sales multiple until today. Okay. Okay, I'm not familiar with the cloud offering. Should do some research. Got you, Robert. All right, gang. Looks like we got through everything from today. Generally a pretty good day today, as long as you didn't, you know, make a trading mistake like I did in coin. So generally a pretty good day. We had some good call-outs again today. So I hope everybody was able to capitalize. Have a great night, and I'll see you all tomorrow.